Good morning, good morning, good morning. Beastie Boys, get us going. It's Friday the 27th of September. Mr. Brown is logging in. It's the morning blast. Hello,
Right.
you there? G'day. You right?
Well, no, actually, it's been a very interesting morning so far. My computer's not working, so
Well, so
apparently
straight off the bat, I'm going to call you a liar because that is not interesting in the slightest.
our IT people have decided that this morning is 7:30 on a Friday morning is the perfect time that I need to install some sort of Windows 11 type program. So I haven't actually been able to do any work for an hour, which is good.
Oh God.
Every hour in the morning that is taken up by this is an hour of my drinking time that's being eaten into is the problem.
Well, yeah, your drinking time, not mine. I'll give you a clue. Let me
Well,
just get
yeah.
through the legals. Nothing discussed on this basis session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited. Trading is PIQ or PIQ Suite, and that includes the affiliates and the hosts, which is Mr. I have IT problems and I'm going to moan about them Brown and Mr. Handsome Face Paisy. There you go.
Sorry, your brother joined, wasn't it?
Way. No. No, my parents decided to stop after me. I'm taking that as
I wonder why.
I'm taking that as they thought. Yeah, well, that's the top's in. It's downhill from here. That's my argument, and I'm sticking to it.
Oh dear. Right, shall we
What's
crack on?
happened? Yeah, go on. Why not? Got nothing
Right.
better to do.
Let's get cracking then. Good morning, all. Happy Friday. It was a relatively positive day for equities yesterday. The S&P up by about 0.4%, closing at a new record high, while the tech sector led the way with the Nasdaq up by around 0.75%. We did, though, see the Treasury curve flatten for the first day in about a week or so after some better than expected US economic data yesterday sparked a little bit of a hawkish repricing of policy expectations, with the two-year yield rising by around 6 basis points on the day and the 2s10s tightening to around 15 basis points. That data comprised the August durable goods orders report, which showed that orders were flat on a month-on-month basis last month, which was much better than the 2.7% decline that economists had been expecting. We also had the final read on third quarter GDP, which pointed to the economy growing by 3% on an annualized quarter-on-quarter basis, unrevised from the second estimate, but that is better than economists had been expecting. A modest downward revision had been foreseen. And we also had better than expected jobless claims, with initial claims remaining at 218,000 in the week to the 21st of September, and continuing claims at 1.828 million. And of course, that continuing claims print pertains to the September non-farm payrolls survey week. In terms of markets elsewhere, the dollar was broadly softer on the day against most peers. Those supportive end of month and end of quarter flows from Wednesday's session it was a bit early, somewhat evaporated yesterday, with the dollar index trading around 0.4% lower to a low of around 100.5, with other G10s gaining pretty broadly, with the Aussie and the Kiwi outperforming, rallying by around about 1% apiece. We also saw cable trade back north of the 134 figure. In the commodity space, it remains a buy the rumor, sell the fact trade in the crude space amid weather events in the Gulf of Mexico, with WTI down by around 3% yesterday, the biggest fall in 3 weeks, trading to $67.60 a barrel. And in gold, meanwhile, we saw a fresh record high for the 6th day in a row, with the yellow metal up by around 0.75%. And for those who keep an eye on it, silver also gained ground yesterday, trading to its highest level since 2012. In terms of other news flow and data from yesterday, there's a few bits and bobs worth reporting. Firstly, we had 1, 2, 3, 4, 5, 6, 7 Fed speakers yesterday.
I thought this was an episode of Sesame Street for a second.
No, we haven't gone there yet. We had 7 Fed speakers yesterday, and none of those 7 made any remarks on monetary policy whatsoever. Commiserations to Henners at News Squawk, who spent about an hour putting together a very comprehensive preview of all of those speeches, and then none of them actually said anything. So poor him. Well, indeed, it can keep the intern busy. Sticking with central banks, we had some Reuters sources reports on the ECB yesterday, noting that the October decision is, quote, wide open, with the governing council's doves likely to push for a rate cut following weak economic data. Of course, this morning we have had much cooler than expected CPI figures from France and Spain, and that has seen the market push its expectations of a 25 basis point cut next month towards the 80% mark. Elsewhere yesterday in the chip space, the Department of Justice in the United States, they have launched a probe into Supermicro, SMCI. That is the alleged accounting violations that came out in the wash a few weeks ago. The DOJ are now in the early stages of formally probing that case.
Oi, oi.
And then in terms of overnight, attention has been on Japan. We obviously had your favourite economic indicator, Ryan, the Tokyo CPI print.
Love that one. Inject that one directly into my veins.
Indeed, a fairly significant slowdown in inflation, 2.2% on an annual basis in September, down from the prior 2.6%. Meanwhile, we also had, and probably more importantly, the LDP leadership election in Japan. For those who are unaware, the LDP have been in power in Japan pretty much since the day DOS, to be completely honest with you, when Japan became a democracy. The new leader of the LDP becomes the new prime minister of the country. And I'm now going to have to pronounce some Japanese names, so
Yeah,
please forgive me.
I'm glad I can take that one off my list. Go for it. Go for it.
Because the chap who used to be the defense minister, a guy called Ishiba, he has won.
Oh, you cop out, because that's exactly what I was going to do. You don't fancy pronouncing his full name then, no?
Well, I haven't actually got his full name because it wasn't in the
You're
Bloomberg
lucky.
headlines. So,
Because that's exactly how I was going to do it.
so
Yeah,
Ishiba has become the new leader.
Mr. Ishiba.
He is very much a continuity candidate around particularly monetary policy and the actions of the Bank of Japan, and he won that contest, I should say, against another chap called Takaichi, and he is a very big advocate of the BOJ bringing their rate hikes to an end and actually easing policy. Both the yen and the Nikkei have been on a bit of a roller coaster ride overnight. Dollar yen softening north of the 146 handle when it went to a runoff between those two candidates, who I'm not going to name again, and then the yen rallying about three big figures or so when the election result was announced, and we see dollar yen briefly dipping back below the 143 figure as we speak. So a fairly significant move there. Similar in the Nikkei, we were up by about 3% at one point. The Nikkei now trading around 3% lower. Obviously, the Nikkei is pretty much just a proxy for the yen in terms of how it is traded overnight. That is pretty much it from me in terms of the last day or so. So, Ryan, your geopolitical headlines, and you don't have to say any Japanese names, hopefully.
Well, yes, I like to think it's evolved from just being just geopolitical headlines, but yes, thank you very much for that. So start off as usual from our very good friends at News Corp. I did actually see Mr. Mehul Patel clicked in just now, so he might be now on anonymous, but I don't know. But anyway, so to begin with, a couple of headlines from those great guys over there at News Corp.
Or he just got bored.
Yeah, or he just got bored. Yeah, very, very, very lightly. So we'll start in the Middle East, as always, because it's always a fun and games over there. The Israeli PM Netanyahu said that he had a meeting on Thursday to discuss the US ceasefire initiative, and they will continue the discussions in the coming days. Trump has said that he would make a deal with Iran if he's elected. Good for him. US President Biden said he will strengthen Ukraine's position in future negotiations by expediting funding during his term and will deal with Ukraine's future defense needs. This kind of ties in with something from Andrew, our friend Andrew Hart, that put a nice little morning note. He notes that Biden has announced that the US will send long-range munitions to Ukraine. Long-range weapons have been denied in the past over fears that Ukraine would use them to strike Moscow. And Russia has warned in the past that any nation providing these long-range missiles would be a declaration of war. So that's something to keep an eye on. Just going back to some News Corp headlines, former US President Trump said he will meet with Ukrainian President Zelensky today, and that although he had some disagreements with Zelensky, he'll see, I quote, "We'll see what happens." And when asked if Ukraine should hand over some land to Russia. And moving back to Europe, moving back to this green and pleasant land. UK Chancellor Reeves said she's
It's not
prepared
very
to water.
green and pleasant this morning, is it?
Well, it's not too bad here. But Chancellor Reeves says prepared to water down the planned budget raid on non-doms amid fears it may fail to raise money. Yeah, so basically she had an idea, they hadn't thought it through. They said, well, actually, your idea is not going to do anything but damage. And so yeah, she's walked that back. Just moving back into Andrew's note. Obviously, he's noted that China's huge moves this week with CSI 300 up 17%, the Hang Seng Mainland Prop Index up 38%, and the the Hang Seng, sorry, Tech Index up 28%, all within a few days. Obviously, this is because they are, as we said before, they're throwing the wok at the situation. Bear in mind, as Andrew points out, that short China equities was the second most crowded trade in the September fund manager survey that the Bank of America put out. So perhaps there's some short covering there. Long US was the most crowded for anyone that's interested. Also, a reminder that China is closed all next week for a holiday, which is some are saying that that's why we're seeing all these measures front run in front of that today, or this week. Sorry. Also, he's noticed something that I've brought up a few times this week, although actually that's a lie, over the past 3 weeks, which is this possible port strike in the US, where it looks like it's going to be all of the East Coast and large amount of the Gulf of Mexico, and perhaps sympathy strikes on the West Coast. And obviously that is tomorrow, midnight tomorrow, US time, is when we find out what's going to go on with that. The ports that are kind of guaranteed to close if this goes ahead, they handle 68% of all containerized exports and roughly 56% of containerized imports, according to the industry data. Like I said, if this sympathy strike happens on the West Coast, that will literally be all of the containerized ports in the US shut in, and it'll be would be the first port strike since 1977. And obviously, we had the 70s and secondary inflation spike on the back of that. So potentially, we're going to be running into some major supply chain incidents, and that would be a bit of an inflation tailwind. And as I said 3 weeks ago, this seems to be well under the radar, and it seems, considering we are only less than 48 hours away from this possibly happening, to me, it's not getting anywhere near the coverage that it should. So definitely, keep it on your mind. Just looking for this morning, looking on PIQ Suite, that awesome platform. Check it out if you haven't already. China obviously thrown some more rate cuts and some liquidity injections and stuff overnight. It's just kitchen sink, whatever you want to call it, being thrown at the issue. We've also had Shanghai and Shenzhen lifting key home purchase curbs to boost the market as well. So it's very much the I don't know what the Chinese for whatever it takes is, but it feels like that's their moment now. Just looking to US industry and chips, Intel and the US to finalize the 8.5 billion in chips funding by year end. That's the FT reporting that. It's going to be direct funding for the chip maker from the US government based on the CHIPS Act and all that stuff that they're doing. And finally, just a little bit of data. We're seeing some people picking up on Toyota's latest production data, where it fell in August for the 7th straight month. Production fell 11% in August, declining for the 7th straight month, dragged lower by typhoon and certification scandal in Japan, which put a pause on output for a couple of sports utility vehicles, and in the US, and just general manufacturing in Japan. So output for August slumped to 709,000 vehicles, and production in its home market tumbled 22%. And that's it. That's it for me, I reckon. It's back to you. Back to you in the
Cool.
studio.
Thank you, mate. Well, the studio is a meeting room at the moment, but nevertheless, we move on. It is, you'll be pleased to know, a relatively light economic docket to close out the week today. There is absolutely nothing of note throughout the remainder of the European session this morning, at least in terms of economic data, although there are some ECB speakers that are worth just keeping an eye on, including Lane, Cipollone, Rain, and Nagel, who will all be making remarks throughout the morning. I'm no better with European names than I am with the Japanese ones. In terms of economic releases, it is all crammed into about an hour and a half in the early part of the North American session this afternoon. We kick things off at 1:30 with the personal income and spending figures from the United States. And of course, this includes the core PCE deflator on a month-on-month basis for August. That's expected to hold steady at 0.2%. On an annual basis, we're set to see that tick higher to 2.7 for a prior 2.6%. I'm not going to say that inflation doesn't matter anymore, but core PCE doesn't matter anymore. The Fed have told us that they have adequate confidence in inflation returning towards the 2% target on a sustainable basis over the medium term. And obviously, they have demonstrated that confidence by delivering a 50 basis point cut at the September FOMC. Consequently, Ryan, as you rightly just said, it is all about the labour market when it comes to the near-term direction of Fed policy. And of course, we have the September employment report due next Friday, exactly the same time, 1:30 next Friday afternoon, and that is going to be a much bigger driver of where policy heads next in the United States. In terms of other things to keep an eye on today, we also have Canadian GDP due this afternoon. The economy expected to have grown by 0.1% on a monthly basis in July compared to the stagnation that we saw in June. Of course, expectations are pretty high that the BOC deliver a 50 basis point cut next month, and a miss there could further cement those expectations. And then lastly, at 3 today, in terms of data, we have the final read on consumer sentiment from the University of Michigan. That index expected to tick higher to 69.3 from a prior 69, although it is just worth mentioning that we had the Conference Board Consumer Confidence Index earlier in the week, and there was quite a chunky downside miss on that data. So just do bear in mind that there could be a little bit of follow through into the UMich number. Last but no means least, there are a handful of Fed speakers today, including Collins, Kugler, and Bowman, although if yesterday is anything to go by, then monetary policy comments could be thin on the ground.
Okay. Oh, hi, on. So mid-yawn. Sorry, I didn't get many hours sleep last night. Thank you very much. Just quickly, just something I've read at the bottom of Andrew's notes, which might be worth flagging, that Andrew's going on holiday tomorrow to Spain, and the last 3 times he's been to Spain, we had 3 times previously he's been to Spain. We've had 9/11. S&P came off 20%. In 2009, and in August 2015, the PBOC devalued the yuan. So,
Oh, for fuck's sake! Can we have a whip to stop him going or something?
Yeah, right, exactly. But look,
who's he flying with? I'm going to ring the border force.
Hopefully not on Boeing. Let's give. Yeah, no, it's been a great week. Thank you so much for everyone to listen. Just for your guide regarding PIQ's Twitter feed, our little PIQ elves, they've got the day off. I'm just too generous like that. So if you do want to follow the market moving news and data, I suggest you get onto PIQ Suite and watch it all live there. Obviously,
or just follow me.
Well, you're on the markets channel, on the market tweets channel on PIQ Suite, so you can do about that. See, mate, I'm thinking of everything. So do that. Just a heads up as well. Obviously, we've been really pushing this, like some 12-month coupon codes and stuff. They will expire. Well, they're not expired. They will turn into 6-month codes probably next week when our prices get jacked up. So not only are you getting 12 months for free at the moment if you sign up using the code BLAST, but you are also being locked in at £10 a month rather than whatever it is in 12 months' time. And it's definitely going up to £30 a month in a week or so's time. So get involved, take us for all we're worth. Have access to it for a year. On me. Do it. Michael, thank you as always. Am I seeing you for a beer later on?
I expect so. If I can actually get any work done with this laptop, then
well,
yes,
I think that's an excuse to bring the laptop to the pub and meet me and Mr. Hewson. Anyway, we can talk about this off air. Guys, have a great week. Again, Michael, thank you so much. Listeners, thank you so much. Remember, if you can't be good, just be careful. If you can't be careful, buy a pram. If you are trading today, keep it tight. And now we've got me and Michael with our awkward silence, so we don't cut off the end of the show. So we'll see you on Monday. See you, mate.
Thanks, guys.
5, 4. See ya.
Bye.